talking about corporate tax consequences, thinking about, in general, forming a corporation, what happens? What is the taxability of these transactions? Well, in certain transactions, a corporation may issue stock in exchange for property without recognizing any gain or loss. These transactions are going to include formation of the corporation, reacquisition of stock, which is treasury stock, and then resale, so selling that treasury stock. Generally, you're going to, I like to think of it, you're hammering it out, you're creating the stock, you're forging the paper, then you send it out to individuals, they buy it, you have your nice vault of cash that you got from selling your stock. If you're thinking journal entries from financial exam, that's something you'd see, right? Debit, cash, credit, common stock. Reacquisition, you're going to rebuy the stock sometimes. And why would you do that? Well, because just like you would buy stock in another entity, if you believe your own company is going to do well, then you want to buy your own shares back, be able to have more ownership of the profits and everything and control of the company. I mean, there's many reasons that a company would buy its own stock back. It could affect earnings per share. It could affect financial metrics. Resale, sale of treasury stock. So then you can keep buying, selling. And that's a great way to make money is you buy your stock back for cheap. You start doing better as a company. The value of the stock goes up because investors see that the company's doing better. And then you sell the stock. I think of treasury stock as being thrown in the vault. They buy it back, they throw it in a vault, and then they can open the vault and sell it again. That's the general idea of how it all works for companies. That's all you need to know. You can leave now. Take care. Now, let's keep diving further into formation. Well, when a corporation is first formed, it may issue common stock in exchange for property. Normally, it's going to be cash. If you just think about like a normal transaction, you log into your Fidelity, Robinhood, whatever, and you're going to buy stock with cash. However, we'll see that there's more, I'll call intimate transactions where you and maybe one or two other people are forming your own corporation, or maybe you're a massive shareholder and you're buying into a publicly traded company and you're contributing your own company as a merger. There's many different instances. So we'll see like cash is pretty easy to go through because it's very common. Just trading cash for stock. You're just buying a share of stock. We've got equipment or real estate you can contribute. We'll talk about the taxability of that. But in this case, there is no gain or loss recognized by the corporation for the stock issuance. So if we just simply exchange $10,000 worth of stock for $10,000 of cash or $10,000 of stock for equipment or real estate, there's going to be no gain or loss recognized by the corporation. One note is that you could easily see a sim with, let's say, multiple situations, let's say 10 situations, and the sim could ask you, what's the taxability towards the corporation? What's the taxability toward the new shareholder? And that's going to be important to know. We've got a lot of charts and great ways to memorize and lots of examples, memorization guide, flashcards, everything, but this is absolutely critical to know. Is there tax being paid here? Also, remember the relationship between basis and taxability. If you have a deferred gain, that would adjust the basis, right? That is something to take into account, something we see in many lessons all the way back from our property tax transaction lessons, and we'll keep seeing as we go forward. Now, here's an example. We have Alice and Bob that form a C corporation, and they contribute $50,000 in cash and equipment worth $100,000 respectively. So Alice has the cash contributed and Bob has the equipment. In exchange, the corporation issues them common stock. There's no gain or loss recognized by the corporation, meaning there's no tax levied on the corporation. Now, what about reacquisition? So once you, let's say, issued the stock, you sold it to Alice and Bob. Maybe you're buying back half of the stock. It could be all of it, doesn't matter. A corporation may repurchase its own stock from shareholders, resulting in treasury stock, which, if you remember from financial, or if you haven't taken that yet, treasury stock is kind of like a contra account to common stock, just like allowance for doubtful accounts is to accounts receivable. So we see a corporation reacquiring its own stock. No gain or loss is recognized by the corporation on the transaction as well. Now, this is tax rules. If you think back to that other exam, that other wonderful exam, there are very similar topics, but the rules are different. And why is that? Because the IRS makes its own rules. Whereas if you buy back your own stock, you could recognize a gain and you have additional paid in capital. Not to go too much into that, but that's why we definitely do recommend not taking the financial and regulation exams back to back. That is just something you want to avoid for sure. Lots of similar instances, but the rules are different. So XYZ Corporation buys back 1,000 shares of its own stock from the shareholders at $10 per share. There's going to be no gain or loss recognized on the repurchase of these shares. And lastly here, resale. So you're selling that treasury stock. When a corporation resells its treasury stock, it does not recognize any gain or loss in the transaction. The proceeds from the resale of treasury stock are generally recorded as paid in capital, as mentioned previously, or a reduction of the corporation's retained earnings rather than being treated as a taxable event. For example, here, XYZ Corporation resells the 1,000 shares of treasury stock it previously repurchased at $12 per share. corporation here is not going to recognize any gain or loss on the resale of the shares. Make sure you have these examples down quite prime and ready for multiple choice questions and sims. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.